there's 2 or 3 little issues around tax. Not only do you have an opening current liability, but you also have a non-current liability as well. And that non-current liability for deferred tax is both 26 and 28. Just make sure that I've got that correct. Now I would look to my P&L for my P&L taxation charge. Despite the fact that we're making a loss, there is an expense in the P&L, and the expense in the P&L is 31. So you've debited the P&L with 31 as a charge, so you must be increasing the liability by 31. So your liability to pay tax is increasing. Balance off now, 2 out of 4. Come up with a figure now, 2 out of 4. It's wrong, but you still get 2 marks. Because we've shown an audit trail, we've said the working, we've put numbers and words alongside each other. You must put numbers and words alongside each other. What else is happening with tax? Have you read anything else about tax in the question? Because I have. Yeah, number 1. Yeah? Deferred tax of 3 arose on the revaluation gain. So we have got OCI tax on the fair value through OCI investment. Now hang on a minute, you'll like this. I think you will like this. The revaluation gain is 30, correct? And there's a deferred tax on that of 3. So the 30 and the 3 make a net gain of 27. So when you look at the OCI, when you look at the other comprehensive income, the gain on the fair value through OCI is 27. So that is post-tax. It perhaps would be better presented as 30 minus 3, but then it would give the game away a little bit more. So your profits are post-tax and your other comprehensive income are also post-tax. This is not the only time I have seen a reference to tax in OCI, because at the top of page 70 there is reference to deferred tax of 2, and the deferred tax of 2 has been deducted in arriving on the gains on the property revaluation figure, and that is a figure of 2. Because when you revalued your asset here, and the gain was 4. But in the profit in the other comprehensive income, the gain on the property revaluation is only 2, because that is 4 minus the taxation charge of 2. So not only do you have a taxation charge in the P&L, but you have a taxation charge in the other comprehensive income. And your taxation charge there is on the fair value through OCI and on the PPE. Let's balance it off. Yeah, where are we going with this? Let's balance it off. 42 plus 26 plus 31 plus 5 minus 38 minus, I say minus 38, that's stupid top. 42 plus 26 plus 31 plus 5 minus 35 minus 28. I make that a figure to be 41. Yeah? So back I go. The figure of 41 can be slotted in to the taxation paid. The figure of 41 can be slotted into the taxation paid. And let me put another little asterisk there, yeah, by that figure of 41, and I'll explain in a minute what that asterisk means. I think there's one thing that we haven't done, which is to read note number 4, and then we can take a break. So let's have a look at note number 4. because we haven't read anything about that at all. Warburg purchased a 25% interest in cash in an associate. Yeah, you didn't have an associate at the beginning, but you sure had an associate at the end. So we bought the investment in the associate for cash. The net assets, the date of acquisition, were 300. They made a profit after tax of 24. They paid a dividend of 8. We can assume a tax rate of 25%. I am Warburg. I have two things happening. I have paid to buy an associate, so that'll be money that goes out. I've paid to buy an associate, so that'll be money that goes out. But I've received a dividend, haven't I? How much dividend have they paid? 8. How much of that have I received? I think they've paid a dividend of 8, haven't they? But I don't get all of it. I'd only get all of it if I owned 100%. If I owned 100%, it would be a sub, not an associate. What percentage do I own? 25%. So the dividend received from the associate is 25% of 8. 25% of 8 is... Whoa, 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 whoa. That was all right, wasn't it? Now, I ought to do a brief working to work out the paid to buy the associate. I ought to do a brief working to find out how much we paid to buy the associate. So the investment in the associate, the opening balance is nil, whereas the closing balance is 100. So the opening balance is nil, according to the balance sheet. The opening balance is 100. I'm tempted to say, do you know what? We have spent 100. So the cash, yeah, this will be the balancing figure, because we spend that amount of money. But don't forget, we are able to take the share of the retained profit. So we take a share of the retained profit. So we will take 25%. So we add on the share of the retained profit. Well, they make a profit of 24, of which a dividend paid is 8. So we're bringing in 25% of... No, am I gone too fast here? Yeah? So the share of the retained profit is 25% of effectively 16. 25% of 16 is 4. So how much did we spend buying the associate? 96. Yeah? How much did we spend buying the associate? The amount we've spent buying the associate is 96. Back I go, back I go, back I go. The amount we've spent buying the associate is 96. There's one more thing that I would like to say about this cash flow, but it is now exactly 63 minutes since we started looking at this question. And given that it's exactly 63 minutes since we started looking at this question, I am stopping. Yeah? We reviewed the marking guide after 45 minutes, and we found that we got 63%. There was a couple of things that we had totally missed out, and we had missed out the fair value through OCI, we'd missed out the associate, we'd missed out the tax. Now maybe you would not have picked up everything else, but you'd have a little stab at the tax, you'd have a little stab at the associate. The fair value through OCI, there were some still easy marks to be got, but the technique, I think, is the important thing. That you know the format well, that you go through the question and you try and pick the information out that as you see it, as you're comfortable with it. If you write a figure down, it happens to be the wrong figure, it's not the end of the world if you go back later and change it. That is why you should try and have double line spacing, yeah, not cramp things up. You've got to show your workings if you're doing something to be reviewed, but if it's a very simple thing, just get on with it and drop the number in. Yeah? Would you like cash flows to be there? I mean, you know, there's a question to practice. There's a nice question to practice called Nylander. Yeah, there's a nice question to practice called Nylander on page 72 as a cash flow question. So that is something which you could have a look at between now and the exam. Certainly you could have another look at this question again. But if cash flow is coming up, some people absolutely love cash flows because they understand the process, they understand the technique, and they can go through it like a machine. It's a little bit like Jurien though. Some people don't like cash flows at all. And if you're one of those people who don't like cash flows at all, you're on the back foot, but you must know the format, you must try and drop in the easy marks, you must give it a go. Because if it is in the exam, it's a compulsory question. Right. Time for a break. Time for a break. Let's take a break at this stage, please. Thank you for your patience.